Good morning, good morning, good morning, everybody. What's up, what's up, what's up? And welcome to another episode of The Breakfast Show with Marisha LaShay. It is so good to be here before you guys on this happy Monday. Today is September 2nd. We are in day two, 28 more days to go. Tia, say what's up to the people.
Good morning, good morning, good morning, Breakfast Show. How y'all doing out there this morning?
We are back. Yesterday was crazy. We're back on this morning, getting ready to drop some more gems and
Yes.
things for you guys. As you guys know, this series is dedicated to what we call financial fanatics, which you see in the back, got the banner up today. Look at God, but thank you for you guys just showing up for us yesterday, tuning
That was
in. If
crazy.
you haven't, tune in. It's on YouTube, it's on Spotify, it's on Apple, it's on Google. Please be sure to go ahead and tune in because you don't want to miss those gems that was dropped yesterday, and we're gonna keep it coming. So, without further ado, today is let's go ahead and kick off our day by doing our mental check-in, which is ranked on a scale from 1 to 10. One being the worst day of our life, and 10 being the best day of our life. Can you be above a 10? Absolutely. Can you be below 1? Sure. No one can tell you how to feel as it relates to your mental health and kicking off your day. So I'm going to go ahead and go first on a scale 1 to 10. I'm a strong 9 because, as I was telling Tia this morning, it's just really something when energies are exchanged in alignment when you are doing what you're supposed to do, because I'm already gearing up for another season or another series in months to come. And it's just September, but I'm already preparing 2 months in advance. So that's not normally, yeah, sometimes, yeah, but I know that it's coming. You know
Yeah.
what I'm saying? So felt good, just knowing, what's next. So that's why I'm at a 9. And yeah, it's on you, Tia.
I love to hear that, just being able to put your vision down on paper, make it plain, right? If the God said, write it down and make it plain, and you're doing that. So that's very
Yeah.
good for you to be, at a 9 and it just be driving you to what your calling is, for this season of your life. For myself, I am a 9. I'm at a 9. I am so happy, this morning and just thankful, one, to be amongst the living. That's, always amazing. But two, thinking about just where I am in my life, what we have, and not the material things, but just what I have inside of me that allows me to inspire people to be their best selves. And I'm just so thankful for that, that every day I get to wake up, and even on my worst day, I hear things like, Tia, like, you've motivated me or you inspire me to do something. And it's like, well, how do you stay down when there are people who are, looking at you to help them become their best selves? And that's my greatest work. Not a therapist at all by any means, but if you bring an idea to me, I want to help see that through, right? So I'm at a 9, just like I was yesterday, because the day is only going to get better, right? It's only going to get better.
That's tough. Like that's tough. That's real, but that's tough. So you guys, if you feel free to, want to share, make sure you drop those comments below. Depending on what platform you're on, it doesn't matter. Please drop it in the comment section because we want to know how you're feeling and how you're checking in and what's your momentum like with us stepping into a new month. It's a new month. So definitely just being able to share that and just checking in on your mental because that's definitely important. Meanwhile, you guys, um, as I stated, it is day two. This show only happens in the months that have 30 days. And like I said, we have 28 more days to go. So, with that being said, you guys want to hop in to our question and what our focus is going to be for today. And today we're talking about mutual funds.
Yes. Listen, I get so pumped up.
Yeah, yo, yeah.
Look, I get so pumped up, like talking about money, right? And specifically talking about the stock market. Um,
Yes.
and just all of the things and all of the ways that we can make money in this world, in this economy. And even though a lot of times we hear, "Oh my God, the economy is so bad," and there are things that are happening with it, right? But there's still ways in a lot of vehicles that can help you put your money into the right space and allow your money to work for you. That is what the wealthy do every single day. They don't work for money, right? They allow their money to work for them. This is why we hear things like, "Oh, you should be getting paid while you're sleeping." What you know what
Oh,
I'm saying? Like this is one of the ways that you could do that. So for all of our listeners out there, I just want you to drop in the chat if you're familiar with the stock market, if you have any type of stock market investments, any experiences. And if you are in it, tell me about your wins and tell me about your losses. And I want to talk about that and just where your temperature is with it, right? Because what we're going to talk about today in the mutual funds is about putting money into the stock market and how this thing works, right? So it won't be this, I'm not going to be sharing any trading tips, but just an option. So, to your question, a mutual fund is a collection or percentage of stocks that you're able to purchase at one price, right? What this is, it allows you to invest in the things or the companies in the sectors that you're looking at, even when you don't have enough money to purchase one stock by itself. Okay. Now, in the short term, or in a clearer form version of what this is you get exposure to a lot of different stocks at a low price, and by you being an investor you will receive whatever income those stocks generate, right?
that's cool. I'm getting me some money. Give me my money. Yeah.
Yes. So it's just a really cool way for you to say, "Hey, I want to invest in this particular stock, but I don't have all of the money." Well, listen, you can invest in some type of mutual fund that has a percentage of that stock, and you're still going to be an investor of that stock, because it doesn't matter if you invest big or if you invest small, right? As long as you have invested, you are an investor. So I do want to share just a couple quick tips on why this is important. And then I do have here on my screen a couple of stocks that we're going to talk through in one mutual fund that you can find them in. Okay. So with respect to time, we're going to do this. So here's a couple reasons why you want to purchase a mutual fund. The very first one is that it allows for you to have diversification. What that means is you can have various stock options in various different sectors. Okay, so like let's say you want to purchase stock in the technology sector, you may want to purchase stock in the energy sector, you may want to purchase stock in the educational space, you may want to purchase, whatever in the retail space. With your mutual fund, if the mutual fund has all of those sectors included, now you're investing across all of those markets, right? As opposed to, let's just say, having 3 shares of a stock that is in the technology space. Well, now your portfolio is just 100% technology. So, and this is really good because you don't have to sit your money all in one sector. You can put it in there. And also, too, oh my God, this is why I say I love talking about money, because once you become an investor of the mutual fund, you're able to see which stocks are doing well, what the mutual fund, Jesus, I just lost my word. You'll see what is doing well. You'll see which stocks are being sold, which stocks are being purchased, and then you'll have the knowledge and the understanding of, oh, well, the technology sector is doing this, the retail sector is doing that, all because you invested in this one stock. It looked like you were about to say something.
That's lit. Like, that's so lit. You out here getting your diversification up in vocabulary. I mean, it's lit. Like, what's this? I mean, talk your talk, girl. Talk that talk about them MFs. Them
I'm,
MFs.
I'm
Them
telling you.
MFs.
So the next reason why you would want to purchase a mutual fund is because it provides a low cost, a low entry point for you to get in. So this is what I'm going to talk about with the other stocks that I have here, and just how important that is and what that really looks like, right? Because you don't have to come up with all of the money to purchase all of the stocks. You can get them all at one low price. Now that allows you to be able to invest stronger, right? Because you can get in where you're comfortable. But then you still get to invest in the things that you want to invest in without having to come up with all of that money. Now, the third thing is convenience, right? This is a very convenient way to purchase stocks because it is very straightforward. If you look at what is all in the mutual fund, it's no BS. Like if they're investing in Apple, then you know how much percentage they have in Apple. You know what the stock is doing, and you know who the manager is of that mutual fund. So you know you everything is just straightforward right there for you. It's just clear and it's laid out. And then the last thing that I want to tell you is that the mutual funds are professionally managed, right? So they're not just put together by some random person. Yes, you have a fund manager who is looking over the mutual fund, looking at what stock needs to be sold, looking at what stock needs to be purchased. And as income comes in on the mutual fund, looking at where can we put more money? How can we grow our percentage here? And you do absolutely nothing as the investor. Yes, you just put your money in and you allow it to work for you.
You got
And
money.
you got money because some stocks, you know, you can have growth. Oh my God, that's okay. Now we got to save that for the stock episode because you could have growth in the stock. Some stocks do provide dividends, right? And dividends are a monthly payment or a quarterly payment that comes from just having one share of the stock or the mutual fund. But we'll talk about that on our stock episode.
This is just wow. I mean, this is so eye opening. Like I would hear mutual funds and I understood it, okay, when I hear mutual funds, you know, there's different stocks, there's different moves being made, but I've never heard it on this level, you know what I'm saying, to, kind of go and run with this. Because I know like my aunt and my cousin, he's not even 21 yet, but she invests like my auntie's like, honey, the financial guru, honey, she's just trying to set him up. But I'm
Okay.
like, I'm on the same thing, low key, because if we can have more trust fund babies, if we can go ahead and start investing, like when we know that we're pregnant, go on and drop that
Start
money.
doing it now. Start
Yeah.
doing it then. Yeah. And see, we offer in my company, we do offer the opportunity for you to get stock investments through the mutual fund. So if anybody is, you know, wanting to take this conversation further, please reach out to me because
Got
I
you.
can help you set that up. Right. And I'll also pull up an investment calculator and we'll kind of talk through what this looks like on the mutual fund sector.
Oh, Tia,
But yeah,
talk
like
that
we,
talk.
and I think it's very important because, and you know, you're looking at how much interest you could get off of the mutual fund. Basically, how much interest are you receiving from just being a part of this thing, from just investing in this thing? What does this look like for my family, you know, 5 years from now, 10 years from now, if I'm starting at one point and I'm adding money every single month and just purchasing these mutual funds over and over and over, what does this look like for us? Right? What, like, how does this work? You know, what when I say like, oh, if I start right now and I'm investing in the mutual funds, what does that look like when my baby is going to high school? What does that look like when my baby's going to college? You know, how does this allow me to live just comfortably, right?
That's the question, because I'm always striving to make sure that I am putting this young man in a position to win. When he leaves my home, like when he leaves my home, he needs to walk into his own home. And who's to say, I don't know, like see, I'm always just thinking black male, have your
Yeah.
stuff
Have yourself
together.
together. Have it together because if you don't have it together, right, this world is not friendly, one, to black people, but extremely unfair to black men.
Yes.
So as they're young, these are conversations that as parents, as aunties, uncles, grandparents, we need to be having with our young men. They don't need to have the conversation about fast money. They don't need to have the conversation about, how to get it out the mud. We don't need to get out and have
You
our
won't get
kids
it.
getting it out the mud. One of my
Yep.
favorite investors, he always says, we're not getting it out the mud, we're getting it out the market.
Is that Anton?
No, not anti. It's well, the Wall Street Trapper.
Oh,
Yes. That is
Anton be
his.
snapping though. He
Yes.
be snapping.
Yes. So it's like, come on. You know what I'm saying? Like
Yeah.
we shouldn't we should not shy away from these conversations. And one of the things, I was having a conversation with a young woman, and her rebuttal to me at every little thing that I said to her was that, well, what if the market crashes? What if the market crashes? What is the market?
Honey,
Listen, when you look at that thing different, when you're an investor and you're on the stock market, when the market crashes, that's not a time to be afraid. Okay, that is not a time to be afraid. If the market crashes, baby, that is a buy season. You buy all of it,
yeah,
all
because
of it.
everything's gonna end up going down. Like, and that's your opportunity to go ahead and rally up some more. Because if you're saying that the market is getting ready to crash, that's almost like the store is going out of
Correct.
in
Just
the
go
sale.
and get stuff.
You just go and get what you need.
Exactly.
You just go and get what you need. You know what I'm saying? Because I was just having a conversation with my daddy. Baby, I ain't gonna be working at 50. I don't even think I'm gonna make it to 40. Because this right here, no, it got to be another way. I always just say it just got
Listen,
to be. I ain't got to be traditional. I want to thank the people that made it all the way to 70, 60 plus years working, 50 plus years working. We ain't. I know the millennials. I know we ain't about to do that to you. I
no.
know we not
And you
about
know
to do
what?
that.
I we have to work, right, to get to that point. But when you sit with somebody in financial services and we're like, hey, okay, let me tell you something. Start doing this with your money. Because if you
Yeah,
have a goal, let's figure out how old you are right now and how many years we have to get you to that goal. And let's set that thing up, right? Let's set it up for you to be successful, to have what it is that you need. When you come into some money, don't blow it. Don't spend it on every little thing, right? Don't spend it on every little thing. Sure. Sorry. Don't spend it on every little thing. Just make sure that you're putting it somewhere where it's going to be making more money for you. So this is why we're always, pushing you people to understand about the stock market and to understand about mutual funds and, just stocks in general and how they help you, grow your money over time. Because this is not a quick game. This is the long game, right?
say
So this
that.
is not
Say
quick
that.
money.
Say
This
that.
is,
This is not
you're
for
doing this
tomorrow.
over time, over time, over time. And then when it gets good, right, you start learning about earnings calendar. And now you know when people putting their earnings out, okay? And then you learn about when they pay out the dividends. And now when this thing gets good, you have a dividend calendar. Now I'm invested in this, and this. And those dividends pay out in January. But these things that I have, these pay out in February, these pay out in March, these pay out in April. I mean, you start getting good where now that money's coming in, you invest it strategically, and you're getting, your monthly payments on time. You don't have to wait.
That's
Oh,
good.
it gets
Talk
so
your
good.
talk.
It gets so
Talk your
good.
talk.
But it does, and I don't want anybody to think that I am just saying, like, oh my God, do this and it's just going to be safe. You have to have some type of risk tolerance. I'm overlapping our shows right now, but you have to have a risk tolerance. You have to understand what type of investor you would be. So this is why mutual funds are always a good thing. It's safe, right? It's safe in the way that, if one stock tanks, you still have all these other stocks to back your money. Okay, that's why it's safe. If you have 100 shares of one company and that company goes down, now you just, out of money. But if you have that same number of shares inside of the mutual fund, well, I mean, they're gone. We're gonna take them out and we'll put somebody else in.
Yeah, I mean, but the way that you make it sound so simple, because when we step into the financial realm, it could be very overwhelming and very daunting, because a lot of us are only stuck with the mindset of a 9 to 5. I'm not gonna get no side hustle. I'm not gonna invest nothing. I don't know nothing about that, so I'm not dealing with it.
Right.
Right. So, I mean, it's just good, how you just share light for us and how you enlighten us, to get to teaching us in a way that we can expand our thinking and the knowledge that's being dropped in regards to mutual funds.
Yeah.
You know what I'm saying? Like, I knew of it, I knew about it, like, okay, all right, go ahead and invest in your little stocks and stuff. But I never knew, that it was just this organized that if one tank, come on and send me somebody else sub, please. Come on, give me some more, give me my money.
Now,
Yeah.
I do, because I know just for the sake of time, I want to tell people like how this thing kind of like really works. So
Go.
I have four of the top stocks, right, that everybody wants to buy, but everybody is also a consumer of these stocks too. So the first one is Apple, right? Everybody got an Apple. Everybody got an iPhone. So Apple, ticker symbol AAPL, right, is going for, as of market close, $229. So in order to get one share of Apple, you would need $229. So remember that. Now the second stock, Microsoft, right? Big company. Everybody know about Microsoft. You want to partner or be an investor in Microsoft, right? Microsoft, ticker symbol MSFT, is going for $417.14. So now, in order to get one share of Microsoft, you have to have $417.14. All right. Now we got two prices up. 229, 417. Third one, Amazon. Who don't have Amazon Prime, right? Who doesn't shop on Amazon? Amazon, ticker symbol AMZN, $178.50 as a market close. Now the market is closed today, but $178.50. Now the last one I'm gonna tell you is Alphabet, or we know it, Google. Now that one, the ticker symbol is GOOGL. That's going for $163.38. Now, if you wanted to buy one share of each one of these companies, you would need $988.02. Okay? For one share of each one of these stocks that I just listed. Now,
Honey, that sounds like a rent payment to me.
so this is why people will be like, "Oh, I can't invest that kind of money. I don't have that money just to put in the stock market. And I may have money, I may not have money, I might not." Right. So now we're gonna look at a mutual fund. Now
Mm.
this one is the Vanguard Total Stock Market Index Fund, right? And this ticker symbol is VTSAX. Now this, before I give you the price, I'm gonna tell you some of the things that they have in here. Okay. So this mutual fund is comprised of Apple, and there's a 6% total assets that Apple make up for this. They have Microsoft. Microsoft is about 5%, closer to the 6% side. They have Amazon at 3%, right? And then they also have Google. They have both sides of the Google stock, and that is at 1.89%. Now, what that means is that is the percentage that stock makes up in the mutual fund. But they have every single stock that I just gave you at an individual price. If you purchased this stock, okay, now hold on, I'm just going back up. If you purchase this stock, and this stock, their year-to-date return has been 15%, trending closer to 16%. Now we could talk about that. That's good money. Okay, that's good money at almost 16% on your rate of return for the year. This mutual fund would cost you $135.58. to have a piece of each one of these. Now, if you look at the price that I told you for Apple, if you look at the price that I told you for Amazon, Microsoft, and then the Alphabet stock, this mutual fund is significantly cheaper than the Amazon and the Alphabet.
It is. It definitely is because the total was $988.02, and you want me to give you $135.58, baby. It sounds like which one you choosing? 135, me please.
Yes. And you still get to invest in
15%.
these companies. And you get a 15, and they're having a 15%. 50, it's actually 15.65% year to date rate of return. That's
Wow,
good money.
that's good.
That's good money, you
That
know.
is good money.
So, and just think about over time, if you buy multiple shares of this, right? You're getting your money, you're getting your profits, you're getting just everything that you're putting into this, you're getting it, and you had a lower entry point, a lower cost of entry.
That's good, Tia. That's good. That's mind blowing, honey. Because
So
first you about to pay a mortgage payment. Now you up here paying a phone bill payment. See, that's what I'm
that's it.
saying.
And
Give me
listen,
my money.
it is so simple. And I say that only because if you talk to somebody who's in the financial services um, industry, we can make that thing plain and clear for you. So that's really all I got for the folks because we can go on and on and on about it. But I would love if anybody wants to sit down, have a conversation with me. We can pull up some different mutual funds. These are just the ones that I wanted to show with the largest names that everyone's talking about. But we can pull up some different mutual funds, see how this would work for you. What is your lifestyle like? I said that this costs $135, but if you only had $25 to invest, still come talk to me. I can make that a reality for you. Okay. So I just want everybody to know that we're here to help. We're here to change everybody's financial wheelhouse, just one piece at a time. So that's all I got. Thank you.
I mean, that was mind blowing. I mean, what? Where did you pull that magic trick from? I mean, like seriously, you out here doing magic in the financial world. And that's mind blowing. Nobody ever made it seem so simple like that. To go with the top brands that we already shopping with, that we already know about. But I mean, my God, Apple's was the highest. No, I'm sorry, Microsoft was the
Was the
highest.
highest.
Apple was the second highest. Then Amazon and Google was the cheapest.
Mm-hmm.
But I'm like, if you go ahead
Alphabet,
and grab that mutual fund, you already getting in the game.
you
And
know.
that's man,
I mean, and the thing is good because I mean, if you even put in, what's called the dividend, you use your dividends to buy more stocks, man, gone. So
so
now,
like when you I have a question.
mhm,
So like when you do like receive your money off of your mutual funds or whatever the case, are you able to, just kind of reinvest it again
yes,
and like just kind of repeat again, okay,
yes,
I made these funds, I'm gonna go ahead and just keep repeating.
yes.
Like I don't even want to pull these funds because I'm like, when you do receive your dividends, are you able to like kind of just stick it away or like what do you recommend that people do? Do they just keep, you know, investing and repeating?
Well, you absolutely can do that on the stock market. It's a term called the drip, and that's just the dividend reinvestment plan. You can tell your account that whatever dividend I get from this particular account, I want it to reinvest itself to buy me more stocks. So if you don't even have to go into your stock portfolio and reinvest it yourself. You can tell the system to do it for you on your behalf. That's how that gets good too. Okay, because you don't have to go in and pull your money. You can continue to reinvest it, reinvest it, reinvest it. And that's where letting your money work for you to grow more money comes into the picture. Because now, not only are you getting the growth from the stocks, you're getting the dividends, and you're not even pulling the dividends out to go and spend it on your everyday. You're just using the dividends to buy more. And now your payment becomes larger.
Okay, and that's what I was gonna like ask you as you're, reinvest it. You started off with 135. Let's say for instance, you make you a couple hundreds, when it's time for the, dividend payout or whatever. And then you go back and you invest it again. It's time to get paid again. You're like, I did great, I'ma just go on and put it on back and let's go again.
Because
And
that one can turn into two, that two can turn into seven, that seven can turn into 30. And now you have 30 different shares of the same mutual fund.
wow.
And the way dividends work is that you get paid per each share that you have. So let's say if one share is, because dividends, you're not going to get a whole lot of money, right? I don't want people to think like, oh my God, I get all this money. You get a fraction, of
Yeah.
what you would perceive as an investor. So let's just say one share, and I'm gonna just make it large. For one share, you're getting $10, but you
Mm,
have 30 shares. You're getting $10 for
for
each
each
share.
share. Yeah. You
Okay.
better get your $300. And
I'm
that's it. You better,
listen. So
and that's
now
it.
you have $300. The share was only 135.
See,
So now you have enough money to then go and reinvest that thing over and over and over and over and over and over. And I'm just saying $10 at where you entered. If this thing grows, so does your dividend. So does your dividend payout, right? You'll get more money. So that 10 can turn into 15, can turn into the
I don't know. It's like a magic trick. It's just real. I'm serious because some people, all they know is working that 9 to 5. And when you trying to bring something new to them, they looking at you like you got a flower pot
like
on your head.
yeah,
Like,
yeah, yeah, yeah.
so it was just really, really cool to kind of deep dive into what a mutual fund is. What does it sound like? Something that we are mutually agreeing upon, that you are mutually going to get paid, that you're mutually going to have access, because I heard great things today. You gave them, the breakdown of the access point. How do I access something like this? Tia, what if I don't, what if I can't afford my $135? You know what I'm saying? But like you just said, let's sit down and talk.
As little as
If you're
$25,
willing.
we can make that a reality.
Exactly. But that's what I'm saying. People just actually taking advantage of that. But some people already count themselves out before they
Correct.
have the opportunity to even step in or to give themselves an opportunity to want to learn about something new. I'm not saying that I know everything, but honey, I didn't heard the term being thrown around. Okay, well, what is it? Tell me a little bit more.
Okay.
You know what I'm saying? I'm always hungry for the knowledge because I always just keep thinking, okay, if I know I got younger siblings, she got her own money. I'm investing for her. I'm investing for him. I'm investing for them. You know what I'm saying? And I think that that's a way like, okay, oh, cool. I think that's really a way to like just kind of segue in to the youth, being able to speak to them about what their options are because a lot of us, with teenagers, oh, you go get a job. Now let me go ahead and sit you down and to show you how to play with these mutual funds real
I'm
quick.
telling you. I'm telling
Let me
you.
get you a math lesson. Let me get you a financial lesson. But this is how you could segue into something else because you could just $15, you know what I'm saying? 15,
Yeah.
$20,
Yeah.
25, whatever that you could afford to give that child, boom, and watch it work.
I'm telling you. And it gets good. Parents can invest for their children through a custodial account. Young people, 18 years old, you're out there, you can invest for yourself. You're 18, you can create your own investment account through the brokerage, right? And you can start doing this thing little by little. Nobody's expecting for an 18-year-old to drop $500 every month, but you have 25. You have
That's
25.
good.
So
It's
let's have that
realistic.
conversation and let's get it started. Let's get it rolling, right? So that by the time you're 25, you're 30, you would have increased it from $25 from when you were 18, right? So now your monthly contribution is higher. You are, investing in some stronger stocks to make your portfolio just better. You're diversifying it across mutual funds, across stocks, across REITs, across different ETFs. I mean, it gets really good to where if we tap into these young people sooner,
Mm-hmm.
We won't have so many people trying to get it out the mud. And the reason why we're trying to make it simple and plain is because these are topics and conversations that are not being had in our communities. They're not being had in our communities. Because if they were being had in our communities and more people in our communities knew about just different ways on how to make all of us financially equipped to live this life, so many of us would not be in consumer debt. So many of us would not have to continue to work past 65. So many of us would not have to stress about what retirement looks like because our retirement is not fully set up. A lot of us will understand really what is a 401k? How is this thing working or benefiting me? What do I do additionally to make sure that I'm supplementing everything that I need? What kind of life do you want to live in retirement, right? Because everybody's just always talking about, oh, I don't want to work. I don't want to work. Okay, but what does that look like 10 days after retirement? Because it's only so much sleeping that you're going to want to do. How much money do you have?
Talk,
Do you
talk
have
that
anything that's just continuously generating things for you? And don't shy away from these conversations because at a 401k, employers are matching, some employers are matching what you put in there, but
definitely.
are they matching enough? And then if they're only matching up to 5 to 6%, what is a 5 to 6% interest rate look like on your money 24 years from now? What does that look like? How much have you really grown? How much have you contributed? But you really don't know that because one, you just hear the term and you're like, oh, I have that, but you don't understand it. So let's have a conversation about that. So that way you'll understand every single thing that you have working for you. Because the game is not about making you think one thing is bad over the other. That's not the game. The game is that whenever you're sitting down with someone and they're asking you conversations about what you have set up financially, you're more equipped, you're more knowledgeable to speak that thing through.
Yes. Well, you guys, you've heard it from Tia. She done gave us an earful this morning in regards to getting those mutual funds. She done broke it down to us. We got to give it up for our good girl Tia because she's on the money, honey. Give me my money. We'll talk to y'all tomorrow, same time, same place. Peace.